Good afternoon. I want to welcome everyone here to our monthly Learn at Lunch webinar. Today, we will hear from OSU Extension Livestock Marketing Specialist, Dr. Darrell Peel, as he provides us a livestock market update. If you have questions, you may ask them through the chat window by clicking the chat button at the bottom of your screens. We have additional information on this and other farm management topics on the eFarm Management page. I will share this link in the chat window. Dr. Peel, I will turn it over to you now.
All righty. Well, thank you, Brent, and good afternoon, everyone. Let's take a few minutes and take a look at these cattle markets. We're getting into fall here, so a lot of movement of cattle, lots of issues to run through here. So we'll hit the highlights as we go forward here. So just take a look at the markets right now. These are Oklahoma auction prices for calves. So I got a couple different weight groups of steer calf prices here. And you can kind of see it's sort of split. It goes back about a year. So on the right-hand side here, we're at about where we were this time last year, which is probably a little bit lower than I would have expected. We've come down off the spring peaks here. And then we had a pretty serious correction in the market, if you will, that came from the stock market affecting futures markets in the early August. And we've been kind of caught in that, although you can see we're starting to actually come back up a little bit on these calf prices. And that's a little counter seasonal. As we move into October, November, seasonally, we would expect to see probably the lowest prices of the year for these calves. I think we're probably already put that low in. I wouldn't be surprised to see this market build a little bit. And I'm going to talk about, drought conditions and so on in a little bit, but the lack of demand for wheat pasture stocker calves is probably also weighing on this market a little bit. And so all of those things are a little bit of a headwind for us at this point. Big feeder cattle, similar story, kind of. We had, we peaked in midsummer. We've dropped off a little bit, but we are coming back again. It's more seasonal for these calves to move higher in the fall of the year anyway. I would sort of expect to see that continue as we go here. So, bottom line for feeder cattle prices, I wouldn't be surprised if we don't see some additional strength relative to the last couple of months as we move into the fourth quarter here. And again, depends in part on a number of factors, most particularly probably the drought. We'll get into that in a minute. Fed cattle prices, you can see this year, last year. Now the scale's a little distorted here because the 5-year average prior to that was so much lower. But I guess that's one of the points here, right? We're still at pretty high prices for all of these cattle markets. We're running, again, about the same price we were this time last year. We've slumped a little bit here through the summer. And some of that's kind of normal summer doldrums. Some of it's other factors that we'll get into here in just a minute. But if you put all of these prices, whether it's calves or feeder cattle or fed cattle, on a longer term scale, it puts a little more perspective on it. So here we are, not very far away from record high prices for all of these classes of cattle. You can see the pattern of what's developed here over the last couple of years. And there's an obvious comparison to what happened about a decade ago under somewhat similar conditions that set up what were then record high prices. And, a couple of things to keep in mind. One is that, when we go up like this, that's due to, of course, a fundamental lack of cattle numbers, which means the market's pretty focused on the calf markets and the cow-calf herd, which we'll get into here. But the bottom line is the calf prices go up faster and farther than the feeder cattle do. The feeder cattle go up faster and farther than fed cattle, and so on, basically up the chain. The driving force is coming from the bottom up. And that's important to keep in mind in terms of the relationship between these prices that affects different operators. The other thing to keep in mind is that this short-term correction we've been in, I'm going to call it a correction. You could even argue that it's an overcorrection to some extent, given the market fundamentals, it is not the peak. It looks a little bit like we've peaked out here. We're coming back down. I don't think that's true. We'll get into that as we get a little farther into this and come back and talk about prices going forward. But, there's lots of bumps along the way, but we're probably not done with this thing at this point. Just quickly, cull cow prices, again, have been running higher every year for the last 4 years, have been extremely high through the summer. They are dropping off a little bit. this fall. Some of that's seasonal, some of it's these broader kind of external factors that have been weighing on cattle markets. And we'll talk about beef production here in just a little bit and how that's shaping up this year compared to what we earlier expected. So still very strong prices, but we are seeing a little bit of decrease in these prices, and there may be some seasonal pressure as we go forward. When we get into what seasonally would be the highest slaughter time of the year, as we cull a lot of cows in the fall of the year. There's a whole lot of charts that I didn't put in here related, and you've probably seen some of these through the year. We started the year January 1 with an all cattle inventory that was the lowest since 1951. The beef cow herd was the lowest since 1961. There's any number of measures, all of which tell you that we're at multi-decade lows for cattle inventories. But I did want to highlight this one because it sets up the discussion of the next few slides here, and that is the calf crop. So this chart shows the calf crop numbers. This is total U.S. calf crop. It actually peaked most recently in 2018. So as we had the last cyclical herd expansion, the cow herd and most of the inventory categories peaked in 2019, but the calf crop was actually at its peak in 2018 and has been getting smaller for the last 6 years. And I put on here my estimate of what USDA is going to tell us as the 2024 calf crop. We won't get that until early in 2025, but it certainly has gotten smaller. The cow herd came into the year smaller. And my estimation is that the 2024 calf crop, I actually had to do some estimating of historical numbers because they didn't go back that far. But I would imagine that the 2024 calf crop is probably the smallest calf crop in this country since 1941 or thereabouts. And so, again, cattle numbers have been getting smaller. Feeder cattle numbers certainly have been getting smaller. And that sets up an interesting discussion of what's going on in the feedlots. Given that the calf numbers have been coming down, there are less feeder cattle out there. And if you look at placements and marketings in the feedlot, they reflect that. So the blue line here is a 12-month moving average of monthly placements. They are coming down. We've been working our way lower. Marketings peaked a little bit later, but are working their way down as well. And so that's consistent with the idea that feeder cattle supplies are tighter. Keep in mind the spread between these numbers, because that's what tells you what's going on with feedlot inventories. And I think the current feedlot inventory for the last several months actually has been masking sort of what's happening with underlying feeder cattle supplies and really the tightness of cattle numbers in general in the country. You look at the cattle on feed report for the last several months, that's the dotted line here so far in 2024. And it really started about a year ago in October of last year. On a year-over-year basis, the feedlot inventory was actually bigger. And we'll look at this in a long-term perspective here in a minute. But for the last year, bottom line is that feedlots have been able to maintain inventories at or above the previous year levels, despite the fact that there's less cattle out there. If you look at feedlot numbers over time, the blue line is the actual monthly numbers. They're very seasonal. But if you smooth them out with a 12-month moving average, you see that the overall feedlot inventory did peak in 2022 and began to decline. But for the last year, it has actually gone sideways to slightly higher. And that runs counter to the idea that and the reality that we actually have less feeder cattle in the country. If you look at what happened about a decade ago, and we actually have less cattle now in the country than we did then, but certainly, what happened to feedlot inventories in about 2014 is suggestive of where we're headed at some point in time. So that's down here where this red line is. We're probably going to drop another million to maybe 1.2 million head at some point in the future. I'm reluctant to try to predict when that is because we've already defied gravity here a little bit by stretching this out over the last year. But I think our ability to keep doing that probably is coming to an end as we go forward. Feedlots have been able to maintain inventories for a couple of different reasons. One is that we have continued to place and feed heifers. So we'll get to the cattle cycle and the cow herd rebuild and so on, which is the flip side of this. But the heifers that we're not saving for herd rebuilding are going in the feedlot consistently. We've maintained the heifers as a percentage of total feedlot inventories up near the upper end of the range that you would ever see for that. We will get a new estimate quarterly of the steer heifer breakdown in feedlots with this month's cattle on feed report that'll come out in roughly 3 weeks. And so, again, I've been watching for several quarters for this thing to begin declining. It hasn't yet. We'll see what happens as we go forward. So there's more heifers in the feedlot than there would have been had we started trying to retain heifers sooner. That's part of the reason feedlots have been able to maintain inventories. The other thing is that they've really slowed down the rate of cattle moving through the feedlot. So that's reflected in days on feed. It's been trending higher for quite a long time. Some of that's structural, related to genetics, the size of cattle, the feeding technologies that we use to push these cattle. But if you look over the last year in particular, it's really accelerated those days on feed. And so, what's happened is that feedlots have been able to slow down the throughput. Think of the feedlot as a water tank. It's got a pipe coming in, that's placements. It's got a pipe going out, that's marketings. And even if there's less water coming in, if you slow down the rate of water going out, you can hold the level of the tank, even though there's less water flowing through the whole system. And that's essentially what's happening with the feedlot situation right now. One of the consequences of increasing days on feed is that, those cattle get bigger. And we have really seen some dramatic increases in carcass weights. This is the steer chart. The heifer chart looks virtually identical in a relative sense. We did not see the seasonal decline in carcass weights this year that you would normally expect to see in the first half of the year. And then seasonally, we always go up in the fall of the year to a peak in the fourth quarter. We've already started that seasonal increase, but again, at a much advanced level compared to a year ago. In fact, this really started at the end of last year when we started to see those carcass weights really advance. And that's a reflection of this current market environment. Feedlots are trying to hold inventories. That's their business. They need to keep capacity as much as they can. So with fewer cattle coming through the system, they're holding on to the ones they have longer, making them bigger. Carcass weights are bigger, and that has implications not only for them, has implications for the packers, and ultimately implications for the whole market in terms of what's happening to beef production. So if you look at cattle slaughter so far this year, this right-hand column, steer slaughter is down much less than I would have earlier predicted. It did drop last year about 4.7%. It's only down another 0.2%, basically almost sideways this year. Heifer slaughter is down about the same amount as last year, a little bit over 2%, which again is consistent with the idea that generally with smaller calf crops, but not really reflective of any change in our pattern of holding heifers. So total steer and heifer slaughter is only down 1%, and that's certainly less than we would have expected coming into the year, and we'll see the consequences of that in just a minute. On the other hand, we've continued to see sharp decreases in cow slaughter and bull slaughter. Dairy cow slaughter is down over 14%. Beef cow slaughter is down over 16%. So total cow slaughter is down over 15%, and add to that the decrease in bull slaughter. And so what we've got is total beef production so far this year. When you think of slaughter plus those carcass weight, or times those carcass weights, really, is that beef production is down currently about less than 1%, about 0.8 tenths of a percent, or 0.8%, I should say. And so that's much less than we predicted earlier. We've been revising our estimates of beef production for 2024 to be a smaller decrease than earlier expected all year. And what's going on is we've got kind of a division in the market. If you look at fed beef production, which would be the steer and heifer slaughter, the slaughter rate is not down as much as we thought. The carcass weights are much heavier year over year. So fed beef production has actually been increasing for much of the year. This is a weekly chart. For the year to date, the fed beef part of total beef production is up about 1.5%. So we're actually putting more of our, sort of mainstream beef, if you will, in the market. The fact that total beef production is still down, fractionally at least, less than 1%, is coming from the fact that the non-fed beef production is well below a year ago. It's down around 15% or so, 13% maybe. And that has a lot of implications, obviously, on the processing beef side, particularly the ground beef market, where we've seen tremendous strong prices there. That plays over into demand for leaner cuts. It's also driving the demand for beef imports up in this kind of a market to try to partially offset this decrease in non-fed beef supplies. So we've got a little bit of a split in that market, but overall beef production is down slightly, not down as much as we thought. Switching gears for a minute, the drought monitor, this is the latest one that came out last Thursday, and really as of last Tuesday, almost 3/4 of the country is abnormally dry or worse. We don't have a lot of severe drought around the country, but we got a lot of growing drought conditions. And this map has gotten increasingly colorful over the last few weeks. And that's the issue that I think is important, and the concern that producers have. In Oklahoma, same situation. We've added significantly to the percentage of the state that's got dry conditions in various stages as we go forward. By and large, we've gotten to this point with relatively good forage conditions, but a lot of concern at this point in time. We don't expect to grow a lot more forage here from this point on in the year, but certainly water supplies are, I think, a concern going forward in the winter, and so on. Now, as far as coming wintertime, we're actually in a little better shape in terms of hay supply. Oklahoma carried over large stocks of hay from last year, as well as had a relatively good hay production year this year, slightly less than last year, which was exceptionally good. But overall, the total hay supply, when you add in the carry-in stocks plus this year's production, are well above any level we've seen for 20 years or so. I think we're about 20% above the 10-year average for total hay supply. So we probably have hay to work with us on this winter, but I think there's a lot of longer-term concern going forward. This is the latest drought outlook map for the next 3 months, really for the rest of the year. Certainly the meteorologists have been telling us for a year that we would see La Nina conditions develop in the second half of 2024 and carry into 2025. And that's exactly what we're seeing. And that's what this map reflects, that, we've got a lot of reasons to be concerned about, maybe water supplies and other things. And obviously the lack of wheat pasture this fall is an issue for these same reasons. But maybe the bigger concern is where it sets us up for potential forage conditions next year. Okay, I'm going to wrap this up in a couple of minutes here, see if you have any questions or comments. Back to the cattle cycle. This is the beef cow herd. Here we are on the right-hand side. The dotted line is my guess of what USDA is going to tell us for 2025, January 1 estimate. Just a fraction over 28 million head. We're already at the lowest level in, since 1961. This will push that down even more. I do think we've gotten smaller in 2024. And the real question is what can happen in 2025 and beyond. You look at the heifer supplies coming into this year, very, very low. The 2024 heifer estimate, heifer inventory was the lowest since 1950. We didn't bring in enough bred heifers to avoid liquidation this year. We don't have enough heifers in development, more than likely, and maybe additional heifers that we bred this year to do much more than stabilize the herd in 2025, probably at best. I would say if I had to pick odds on whether the herd goes down again in 2025, I'd probably give you slightly better than 50-50 odds that it would go down, as opposed to holding steady or maybe increasing fractionally. if we start some heifer retention late in the year in 2024, we might be positioned to see some growth in the beef cow herd by 2026. But even then, I think it probably would be a relatively modest amount that would be possible. And right now, we don't have any indications. There's a lot in this chart, but to sum it up very quickly, you can see in the last herd expansion, cow slaughter as a percent of total beef cow slaughter, I should say, as a percent of total slaughter reaches a very low level. We cut culling to the maximum. We cut heifer slaughter down as we save heifers for retention, for placement in the herd. Both of those numbers reach a low after we start herd expansion or in the process of starting herd expansion. We did the same thing in the early 1990s with a similar full-blown sort of cattle cycle. Where are we now? The cow slaughter part is coming down. Cow culling for 2024 will probably be in the range of 10, almost 10.5%, which is about the long-term average. It's not low enough to suggest that we're actively rebuilding the herd. And more importantly, the heifer slaughter number has not started to decrease even yet, let alone reach a bottom. So all of that's ahead of us. All of that says that at this point in time, the best estimate I have from this data would be that we are not retaining heifers. It could change here at the end of the year, but that would set up, again, very modest amounts of, a modest amount of heifer replacement heifers available going into 2025 and even into 2026. So it's a slower process. We got to rebuild these female numbers at some point in time. Doesn't look like much of it's happening in 2024. Continuing drought and drought threats are, I think, a fairly big factor going forward. And then when you add to that higher interest rates, although the recent rate cuts will over time help that a little bit, but the cost of financing, the overall cost of production, all of these factors contribute to a much slower rebuild process in terms of what we can do relative to what the drought does and what we choose to do based on our expectations of the future. So I think we're in this for a lengthy period of tight cattle supplies, elevated prices. And for that reason, even though it's a little bit scary for me to say that we're close to record levels in 2024, we're probably going to move higher in 2025 and 2026. I don't think the overall peak in this process happens, certainly not before probably 2026 at this point in time, the way things look out. So with that, I'll stop. If we have time, Brett, we can take a question or two. This is how you find me. Most of you know how to find me, but if you'd like to get the Cow-Calf Corner newsletter, there's the code to scan that'll take you to that sign up.
Thank you, Dr. Peel. I did set it where people can unmute themselves to ask you questions, or they can also type questions into the chat box.
Very good. If we have time, we can take a question or two.
We do have time.
The silence is deafening.
I know. I did share a link to our webinar survey in the chat window for everyone to fill out for us. That's helpful in giving us feedback for future webinars.
I didn't talk about, since I don't have a question, let me make a couple of quick additional comments. I didn't talk about beef demand. It's holding relatively strong. It's obviously a key. If it doesn't hold strong, then that changes things somewhat, but it still continues to look generally pretty strong. We are seeing some weakness on the food service side. Restaurant traffic perhaps has slowed a bit, but overall beef demand has been robust. I didn't talk about trade other than a brief mention along the way. Exports are off. We don't have as much beef, and at least in general, we've got very high prices. Imports are up. I mentioned that. So the trade situation, and actually the exports are rebounding. The most recent data actually showed some strength in that. So all of those factors they could be negative. They're generally positive at this point. So I didn't talk about them specifically, but obviously they're important things that we have to keep in mind going forward.
Thank you, Dr. Pill, for your additional comments. I still don't see questions, so I'm going to wrap it up. Thank you everyone for joining us today. I have not scheduled November's webinar yet, but I will share that information through email and social media once that information is available. So thank you again, everyone, for joining us. Thank you, Dr. Pill, for presenting today, and we'll see you in November.
Very good.